Um, hi. This is just a quick view of the sort of results you can expect. So on GBP JPY, using this particular technique, you get a 60%. You get very few trades. We in fact had 9 trades altogether. 4 of them won at 2-1 and 5 lost, which was a 61% 1-to-1 equivalent win rate. And on Australian dollar, we had 20 trades, 12 of them won at 2-1, 8 lost at 75% win rate. Euro USD, we had 19 trades, 12 won at 2-1 and 7 losses, so equivalent win rate at 1-1 was 77%. NZD, 21 wins, 11 losses, 79% equivalent at 1-1. USD CAD, 6 wins at 2-1, 3 losses, 80% win rate equivalent. Not many on there. Swiss franc, all the other bits, because I was doing various tests on this, back tests. 15 wins at 2-1 and 5 losses, 85% win rate, 1-1 equivalent. And GBP, 15 wins and 4 losses at 2-1, 88% win rate, 1-1 equivalent. So, as you can see, sort of, if you just stuck to GBP, Swissy and CAD, and maybe NZD as well, you're getting some really nice 1-to-1 risk reward equivalents. You're in the 80% and late 70s. So, this is. I was saying that I prefer a higher quality, more quality than quantity. Now I'll just go through the method. So, in fact, if we go back to the beginning of this, where I started, I went back to January 2019. So, I mean, there is an argument to say I've been back far enough, but there was an awful lot of testing to do in the time I had available, so forgive me if you think it's a bit... Let me just try and get back to... I'm just getting down to the H1 to show you the method. So I didn't start here because we didn't get a full week. So I started on the 6th, 7th of January. So as usual, I would frame the first 00 to 0900 boxes, as we've done here. I haven't done it entirely accurately because I knew this was not a qualifying trade. So basically the concept we're trying to achieve is to get what we're trying to do is we know the market maker cycle. We get a compression zone, then an expansion zone, and then a distribution zone. So that might follow some kind of trend direction as well. So what we want to do is try and combine that process with trend direction, and so the would be better. I trial various things, and I found that so if we were taking up direction, for instance, say on this box here, we were thinking the trend going to the upside, because we had our box and then price went upwards. Then entered this box. If it then continued on out upwards, and we got a candle close in that direction above that box, that would be a qualifying trade. But we found that price went upwards and then reversed back downwards, so that doesn't qualify as a trade. Now over here, this does in fact qualify as a trade, and in fact was a 2-to-1 winner, because what we had here, sorry, I'm just putting this overlay on. So what we had here is price was opened in the box. It didn't break below the box. So the first candle close outside the box was in an upward direction. So that set our direction. So that's what we're looking for. Now in this box, if price had broken downwards, that would disqualify us. But then this candle closed above the level of the box. So that at this point here, that qualifies us for an up trade. So I'm taking initially the height of the box as the first target, but I'm actually opening the trade here, and the stop to start with is at the bottom of the box. So it's a bit confusing, but basically I'd measure the height of that box for my take profit target 1, and possibly depending on how the market was traveling, I might try and go for that little bit extra that I used between the top of the box and the first qualifying candle. I mean, as we go through examples, you'll see that concept a bit clearer. So here we broke down below the box. This is a good example of one that doesn't qualify. So price broke down below the box, and then we're going along here. So we're looking for another breakout below the box, which happens here. But prior to that, price broke up here. So that disqualifies that as a trade. And then on this one here, the qualifier, and you start to what a qualifier looks like now. So price is coming along. It does move above the box, but it doesn't close above the box. So that doesn't count, but price then comes down and closes here below the box. So that immediately qualifies that box as a down direction. So now we're waiting for price to, on the Tuesday box, to close downwards, and there's a close here below the box. So that qualifies us for a trade. So that then becomes a qualifier, and so if we zoom out a bit, we can see that we qualify on this candle here. Our stop is just up here somewhere, 46 points, and we easily make double that, 2-to-1. So that's 2-to-1 win. So now here on this one, we get price coming downwards. It closes below the box, so we're looking for a down direction now on the Tuesday box, but price then closes above it, so that disqualifies it. So basically the idea is if trend is moving this way, we want to see our boxes, the Monday box and the Tuesday box, in line with the trend and any kind of market maker manipulation, because if price is really trending, market makers are having to process their orders. They have to put through their orders in the direction with a strong trend. So if there's a strong trend to the downside, we know if we get closes below both boxes and no closes above the boxes, that the market, there's so much market pressure to go to the direction that price is taking us. Whereas if the market makers have enough time to take price above the box, even though the trend is to the downside, we know that there's not as much downward pressure, so we want to stay out of that trade. And that's basically how we get birds of business of what's happening in terms of buying or selling pressure. So here on this one, you can see prices coming up here. First box, there's no attempt to take price downwards, so upward pressure might be quite strong. It closes above the box on the first day, so that qualifies. Comes to the bottom of the box and then closes above again. So there's a clear indication that market makers are having to order process with enough speed and pressure in direct, so that gives us a higher probability trade. And GBP USD is a very reactive, volatile currency, and that's why we're getting such on this one. And here you see it again. I want to try and find one that is not a qualifier for the reason that price doesn't move outside the Monday box. So here, this is a good one as a demonstration. On this one, you can see that price doesn't move outside the box here on Monday. So that disqualifies this trade immediately. So the whole week is disqualified. So you can see the disqualification on Monday. You don't have to wait for Tuesday. You can see that this is not the highest probability trade from this point of view. So so that's GBP USD. I'm just going to show you USD JPY as an example of a currency that doesn't really, the pattern, the character of the currency doesn't really suit the system at all. I'll just go to H1, and you can see the way the currency moves. It just hasn't got the character of the way it moves. So very few trades. So the way this currency moves is it goes flat very quickly. So say here it comes up here, goes flat. So there's Tuesday finishes without. So even although Monday is a potential qualifier, over here you can see Monday is a potential qualifier because we get price comes down here, then closes above the box. So we're thinking upward pressure, and then Tuesday comes along, goes to the top of the box, and then price comes back down again. But there's no close above or below the box on Tuesday, so that just doesn't qualify as a trade. Although it does close later, that's not the system we're looking at. We're trying to get an image from Monday and Tuesday of where the dominant price pressure is. So this one we get it. One of the rare examples on USD JPY, you actually get price come into box. Although price moves below it. In fact, this is a disqualifier, I have to say, because there was no movement above or below the box. So in fact, this is wrong. We've got to adjust the figures on this one. There's one extra loser. So this one didn't qualify because price didn't break out of the box here, although it did the following day. I don't know the different set of rules trade JPY, but it's a very old currency, and I would just stay away from it because we've got so many other pairs to choose from. We've got all the crosses to choose from, and if we try Twisted Sister, which is the old trader name for GBP JPY, we might find some trades on that one. So so Aussie 75%, that's pretty decent. Euro USD 77%, that's pretty decent. So anything above 75%, I would think would be viable to go for 80%. So have a look through that, do your back testing, see what you think, and let's talk about it when you've had a look and see what you all think about this as even as an adjunct. I mean, I will only trade what I think are highest probability trades. I won't trade anything unless I'm fairly sure. I mean, you could look at that in combination with price action, all sorts of other things if you want to. But I think on GBP, certainly this holds up totally in its own right as its own system. It's got such a good percentage win rate. Okay, you only get 19 trades, but I'd rather have 88% chance of winning and much fewer trades. That's just me personally. You all have your own risk tolerance, but that's where I'm at. See you later.